Hello, audience, and welcome to an overview of Chesapeake Gold. I am Jean-Paul, Interim CEO. I'm here to talk about Lucy, as well as our recent addition to the Silver Index, the NASDAQ Silver Index. Over to you, Matt.
Jean-Paul, good to see you. Thanks for coming back on the show. I think we had a good chat last time out. Still interim. What do you have to do to, make this a full-time gig?
Yeah. So first of all, I think I'm doing all the right things. I think my investors and the board appreciate all the work we do. It shows based on, the work that I'll be talking about today at Lucy that, I'm advancing our projects and bringing them forward. And I have more exciting news to share as the year goes on, with the work that we're doing both at Metates with the metallurgical work, but also with continued exploration at Lucy. So I'm happy to share as much as I can with you today, Matt.
Okay. Well, let's make it go back a bit and remind people, because I think last time what I was sort of intrigued by and kind of enthused by was the fact that Metates was not necessarily the flagship or being touted as the flagship, because it has the scale and potential, but you've got some work to do there. Lucy's the new girl in town, so tell us a little bit about that, or remind us about that sort of change in strategy and the why, and then let's get into Lucy proper.
Yeah, so I would still consider Metates to be our flagship asset, right? There's, no one's going to shy away from 19 million ounces of gold and another 500 million ounces of silver, and that's one of the reasons why we were added to the Silver Index, which we'll talk about after. But like I said before, Matt, a lot of the news that's going to be coming out, more in the near term will be about Lucy, because it's easy to go do exploration, 6 weeks at the lab, and I get assay, results back, and I can put out more information about what Lucy is and how big it's growing. Whereas Metates, it takes a bit more time, because in the lab, it takes time for the oxidation process, and then later to receive the recoveries to share with the market. Right.
Okay. So still flagship, but it is number 2 in terms of the rank, in terms of what you focus on, what you're able to talk to the market about. So let's kind of find out what is going on at Lucy's. We've seen a few headlines. The recovery rates are good, but what else can you tell us? What else have you learned?
Yeah, so just a little refresh before I jump into that. On that long section, we basically highlight to the market back in November that, we had 8 holes along a 500-meter corridor. All the mineralization, we hit it right from surface. One hole on the far eastern side was 10.5 grams over 24 meters. And then the far opposite side, we had in hole 6, 19... we had 6 grams over 24 meters. So, it's, really good on either side. And then down the middle, we had another hole of about, 2.6 grams over 30 meters. Again, all from surface. And we observed that the mineralization looked to be oxide for the gold. And so that led into what we've been doing now. And so about a few weeks ago, we announced to the market that we had done a whole bunch of metallurgical work on the core. We took samples from each of the holes. 4 holes were chosen across the deposit from east to west. And we did some, standard bottle roll tests on the work with cyanide leach. And within the first 24 hours of the test, we achieved maximum recoveries. And we were achieving up to 97% gold recovery on 2 of our best returns. Our worst one was 91%, which is nothing to shy away from. That's a really good recovery. And then 93% on another sample. So all in all, average 95% recovery. And these samples, again, were taken across the deposit. And we can see that the mineralization is great for probably a CIP or a CIL plant and later down the road.
Right, okay, which is great, and all part of the journey that you've got to go on with Lucy. But, and it's great sort of highlighting, 6.1 grams per ton over 6 meters. But, in there was 0.88 grams, 1.95 grams, 2.57 grams, over sort of similar sorts of intervals. So you've got to kind of piece together and be able to tell a story or, what the potential of this ore body is, and how could we possibly mine this thing out at some future date. So how much more drilling's got to happen? How much more work are you going to be doing this year on Lucy?
Yeah, so we've already initialized the phase 2 drilling program. So we have another 10 holes going. And we're going to prove out that there's higher mineralization also in the system. And the point of the whole program, we're moving towards the west. And to the west, for example, we had on surface in trenches, we had 15 meters of 1.78 grams. In another trench that we have about 1.75 grams over 55 meters. And then we had another 32-meter trench sample of about 2.1 grams. And we're going to be drilling under those trenches. And then as we move towards the east, we have additional trenches to the east that weren't drilled underneath. So one was 10 meters of about 1.5 grams. Another one was 50 meters of 0.63 grams. So the whole point of it, to the west, we're going to extend the mineralization beyond what we know. And then as we move towards the east, the whole plan is we're drilling from the north and from the south, and we're basically determining what direction the mineralization is heading underground. So this is, I would say this is kind of an early stage follow-up exploration program. This is not the big shebang. On the back of this program, we'd have a much larger exploration, campaign. And the reason for that is, we want to make sure we know which direction the mineralization is going under surface before we start drilling at a much larger amount of holes and meterage as well.
Right. Is the cost of drilling coming down? I mean, what is it per meter these days where you are?
Yeah. So the cost for us is about $150 per meter. And Matt, you can test that's a really good price that we're getting. That's all in, again, with assays and everything. So that's a fantastic price. And it's with a drilling company we've used for a long time. And we have a good, relationship with them, and they do a great job too.
Okay, interesting. So, and talks about money, obviously, 10 holes is great. And so what sort of depths are we talking about? Similar sort of
Yeah, so in total, we're going to do about 900 meters of drilling. So it's going to be short holes again, right? Again, this is kind of an initial stage exploration program. Once we get an idea of where it dips, then as we go deeper underground, we're going to have longer holes to continue to hit mineralization. And so that's why much larger programs are to follow. The other part of it is not only are we open at depth, but we're also open to the east and to the west, right? And so we're doing work on either side, both mapping and geochem samples at surface, soil as well as rock, to continue the mineralization east-west. And again, those will also be, hitting holes right from surface and hitting mineralization hopefully at surface as well. Along the east and west corridor. Right.
Okay. Now I'm always interested. Look, it's been a sort of rough ride for precious metal companies of recent years, last 2-3 years. You guys have also had the job of kind of trying to prove out that Metates can actually deliver on its scale in terms of recoveries, in terms of the economics, etc. So again, that's a process you're still in. So you've come in. You're looking at the company said, look, we need a new focus. Lucy can give us that. It's not a whole bunch of drilling, but it is at least moving things forward, and it is maybe advancing the narrative around Lucy. Should Metates, sort itself out, maybe Lucy gets flipped out, or maybe you do that on the side. It certainly won't be your flagship, right? So knowing that and knowing the sort of market at the moment, can you just sort of talk to around some of the decision making around keeping the company relevant and keep advancing things forward versus squatting down or hunkering down, I should say. Why move, Lisa? Remind people why you thought it was important to do that rather than wait for this kind of bigger opportunity to kind of resolve itself.
Yeah. So the stuff that's happening with Metates, I can't speed things up. Right, it takes time for the chemistry to work on the rocks, and so I have time to just basically sit there. And instead of sitting there, we are very fortunate that we have the optionality to have Lucy, right? So where I can actually do work and put the announcements out to the market. Lucy has been getting a lot of traction with the market. I did a conference back in November with Scotiabank. We traded up 40% that week, just sharing the story about Lucy. I did another talk last week and our shares are up again this week. The more I share the story about Lucy, the more traction I'm getting, and the shares have been moving on the back of that. And so we're very fortunate to have both options. And when it comes to deciding what we're moving forward, that ends up being an economic decision for myself, the management team, and the board. But as as things move on, there is a potentiality that, maybe Lucy gets pushed forward based on the grades and what we're seeing at site so far. And if it were to, it could also be the vehicle to fund the larger project, which is Metates. So that could be another option available. The best part here, Matt, is I have optionality now. I'm not a one asset company. I have two stellar assets that we could advance and continue to move forward, which is a great thing to have.
It absolutely is, but the market is the market, right? And there's been, since you came on board last October, or certainly it was announced that you stepping into interim CEO, I should say, last October, you had an immediate kind of spike, nice reaction in the marketplace. It fell away again. You've had a sort of spike again, at the end of January, presumably something to do with the NASDAQ metals silver index, but it's fallen away again. So it's great having these moments where you kind of get a bit of trading and people take the chance to sort of maybe even trade out. But the general trend is what I'm interested in, because I can't guess when these peaks will come and go, is where do you think the value is going to come from this year for you and your shareholders? You're sitting at slightly above 100 million market cap today, share price around to 170. How do you get that growth component into people's minds?
Yeah. So again, let's talk about Lucy first. So right now we are drilling. In a few weeks, in 6 weeks, we'll start having assay results coming in, which I can share to the market. Tell the market how we are doing. What are we seeing in the drilling? We have geochem work that's being done on the surface. I can show how the footprint's increasing as well. But then at Metates, if you go back to September, we found a solution that was 50% faster when it comes to the oxidation process. And we're starting to come into the area where, we're getting those columns off and we're switching them over to cyanidation. And recoveries are starting to be, discovered here on our side. And so that's another, I'd say, catalyst that's coming up, is a release to say, this is how our technology has been working on Metates, which, will be an exciting thing for the market once we get to that stage. Because I know the market has always been waiting on the technology.
Right, but I'm not sure we kind of addressed the kind of question around the kind of the scaling of Lucy. If you don't mind, go back to that. Is you're drilling, you're not spending a whole bunch of money, you're not doing a whole bunch of meters, and then the grades are, they're solid, right? But it's about, it's asked, it's about sort of tying that ore body up and trying to demonstrate that the ounces are in the ground, the per ton grams are there. You can't really do that with 900 meters. And you don't want to go and blow your brains out and spending a lot of money trying to prove it in a market like this. So that's what I'm saying. What are those kind of baby steps that you're going to drive that growth?
Yeah, so this is the baby step I'm doing today, all right? I'll put it in perspective. All we know is 500 meters strike, and we know about 25 meters below the surface. That's all we know. We don't even know the thickness of it, okay? This drilling program we're doing now is going to extend the mineralization to the east and the west is the goal of it, right? And then it's going to tell us how further deeper it's going and what direction. So we're going to keep adding meters. Now, what does that mean? If I had something sub 1 gram, then all that drilling, we're not going to be, basically adding a lot of ounces. But if we continue to have mineralization like we've seen in the first program we did, then it's really quickly the ounces can add up, right? It doesn't take a lot of, moving to the east and west or moving down to add ounces. And so getting to the goal of, hitting, 2 million ounces could come a lot quicker than, say, a program on a project that has, sub 1 gram as their average grade. That requires a lot more drilling. And it's going to be a lot more larger footprint, whereas this could be a smaller footprint on the grades and also can accumulate the amount of ounces that we need much quicker to get to that critical mass. Okay.
So what's your reading of this year? The way the market's been behaving is kind of quite strange, really, in the sense that some gold companies aren't getting value for what they've got on the ground. So again, it's come back to how do you interpret that? How do you play that? How can you utilize that? I mean, and what do you say when you kind of get these reactions from brokers or institutions?
Yeah, so mostly in the equity space for gold, we're undervalued for sure right now. And really what's going to change is if you look at, globally, including the Fed and the US, they've realized that the tightening that they've been doing over the last few years, they've probably reached the end of that. And you'll see in any sort of tightening period, the minute the banks realize that it's too much, the Fed will react and they'll start pulling things back. And once that starts to happen and interest rates start going back down, metal prices, specifically gold, are going to take off. We've seen this year, every time they've done this in the past, that is what happened. So we're sitting at $2,000. It's one of the reasons why we've been staying at $2,000 this year. I think we were under maybe 1 or 2 days. That's all this year, under 2,000. But the risk is to the upside here when it comes to the metal prices, because additional tightening seems to be not the direction that the Fed will be taking, or the Bank of Canada, or the Bank of England.
Right, but at the same time, I like the fact that gold is up, but what people never talk about is the fact the costs have gone up, and and when sort of push, so the CEOs I'm talking to is saying, well, actually, people have got to get used to a new reality in terms of the cost environment. So again, things like that. That's the bit that I'm sort of intrigued by when you're obviously far away from planning out building a mine, right? But you've got to factor that into your thinking when you're sort of working out, do I cut or and run, or do I kind of keep pounding the dollars in the ground? So I think the new number, ASIC number, I've heard anything from the old days. Let's aim for $1,000 ASIC. Would that be brilliant? That's a perfect number. Some get a lot lower, and some struggle to get there. But the average I'm hearing is sort of $1,250 to $1,400 as an ASIC average number, right? High grade projects like Lucy, perhaps not such a bad thing to focus on in the short term, because you imagine if you get it right, your margins will be maintained.
Yeah, so our margins will be much higher with higher grades in the ground. We're moving less rock, so there's less cost involved. But I just want to put one thing in perspective, Matt. If you actually looked at the Metates PEA we put out in 2021, the assumption on metal prices there was $1,600 gold and $22 silver, right? We have gone way past that. Long-term precious metal prices have come up from there. And so even our PEA holds quite well in the environment where inflation has taken over, because our assumptions were really conservative in the beginning.
Sure, but have you done work on the cost basis as well, though? Will you think your margins will maintain, or you think they're going to increase in that kind of environment?
Yeah, so basically, as the metal prices have been moving up, I think I heard somewhere, I forget what the paper was, costs have come up by about $200 an ounce. Put that in perspective, for Metates, our all-in sustaining cost was around $750 an ounce. So that brings us up to $950, and the metal prices have also gone up by another $200 dollars an ounce long term, and that basically nets it out to being, I'll have the same economics as I did when I put out the PEA back in 2021, and it's still considered to be a low cost project.
Well, it'd give you $1,000 net, wouldn't it, in that basis, if you are $200 more. Okay. Interesting times out there, and I'm sure you've got one eye, ears to the ground, and one eye to the future. Appreciate you giving us that update. Things are moving
Matt,
forward.
Do you want to talk about the silver index for 2 more seconds? Because I think
we're happy to. Yeah. Well, what can you tell us?
Well, so I think it came to surprise to the whole market. If you look at our why we were chosen, Chesapeake Gold. People think, it's a gold company. But Metates has 500 million ounces of silver in it, right? And there's a chart in our presentation which shows all the deposits globally for silver, and we are number one. We're in the top left corner of that chart, and so we're a very large repository of silver. So it was a no-brainer why Chesapeake. It validates the work that we're doing, both at Metates and at Chesapeake, that we've been added to our first index. And that also means that we could be added to future indexes going forward. And what that means to our investors is there's more volume of trading. One of the things that Chesapeake didn't have was a lot of volume of trading in the past. But since that happened, and if I take out those few days where they were trading in, our volume is up 3 times than what it was before. So
but how does this work for you? Like being part of an index is great. It opens you up to a much different pool of investors, and a bigger pool of investors as well. But on the, as you say, 29th of January, you're sitting at, $2.47, but it kind of came down as violently as it went up. So what's that done for your share registry? And, why why I guess people must have been trading out. So explain what you thought happened around that period.
Yeah. So I think the most important thing to say here is, 40% of our shares are held by a small group of individuals. So that is Eric Sprott, Peter Palmetto at Sun Valley, Alan Pangborn, our previous CEO, second largest shareholder, and then it's Randy Rifle as well, our current chairman. And so they've all held on to their shares. I've been talking with our investors, and a lot of them have held on to it. And it did trade up. It traded back down. There was probably some movements of individuals in that period, as well as the rebalancing that was happening with the index. But overall, it set a new platform for us to move the stock much more quickly. And anytime we put out new news, the market basically acts way more efficiently than it did in the past. Okay.
Well, I guess we'll continue to track and see how you get on that index. Who else is on the index? Are you in good company, or is it? What was it limited? Was it limited to like a certain number of companies? I mean,
no. So there's only a few developers that have been added to the index, which puts us in a good position. And then there's a whole bunch of miners, whether they're large, let's say Hecla or Pan American Silver, much larger silver miners. So we're in a good group of individuals. And that brings, it brings up the reputation of the company and gives us more credibility and sets us to a new level. And like you said earlier, that means that a lot of other institutional investors or even brokers are starting to be aware of the story and be more interested in the story, which is a great thing for Chesapeake.
Good stuff. Okay, well, we'll see you soon. May even bump into a PDAC. Keep doing what you're doing.
Yeah, thank you so much, Matt. And if anyone's at the PDAC, we're going to have a booth on the Tuesday, Wednesday, 2620 is our booth number. I hope you come by, and I'd love to share the story and show you the rock of Lucy and some of the rock from Metates that is, shows oxidation.